Shall I start? Can you hear me?
Yes, Amit, we can hear you.
Yes, we can hear you. Please start.
Okay. Well, thank you very much for inviting me to, at least virtually, to CDS, which was one of my very early teaching jobs. I left Delhi school to join it with K. and Raj at CDS. Can't remember the year, I think it was 1972. Anyway, you see, this is more than 70 years after Indian independence. And this is exactly the 50th year of the CDS. I should begin by telling that when CDS started and Raj left his job as Vice Chancellor in Delhi University and came here, and I joined Raj as the youngest colleague. I was also his colleague in Delhi school and left. We both had one common feeling, and that was that in some way Delhi school was becoming a sort of well-known place, but more for what it was doing in terms of international high-tech economics, but virtually very little in terms of understanding India. CDS was started basically CDS was started with a view to strengthen what is called applied economics. But I should say we had the hope that this would be the first institute in India which would be able to a certain extent to combine economic with statistical work or survey work and so on. To some extent, the famous report which Raj and others wrote from CDS was about the so-called Kerala model, was an attempt at this. I made my small contribution in terms of writing a piece on Indian agriculture called so-called semi-feudalism around the same time, just when I was joining CDS. But I don't think this program of combining theory and and applied work really went very far, partly because in India it is quite difficult to do this for reasons which will become clear over time. I chose this lecture is partly that, because there is a certain way in which you can think of unemployment problem in India as an economist, and you can think of how to, what would be the solution, demand, supply side, demand side, etc., etc. You can say various things, but somehow they seem relatively unimportant in terms of understanding what is going on. And this is something which I want to emphasize through this lecture. See how this happens, why this happens, and how certain types of politics gets connected with this. Now, as we all know, India started as a partitioned, India achieved its political independence, but as a country which is partitioned, and the partition was largely based on religion. Congress officially was a secular party. Its main opponent, that is Jinnah at that time and the Muslim League, was certainly wanted a separate homeland for the Muslims. But what was important is that politics was being played out almost by compulsion, in spite of what individuals wanted, like Nehru and so on. The politics was being played out mostly in religious terms, religious digits. And the reason for this is it has an obvious appeal in a country with vast illiteracy, vast unemployment, with vast poverty, and religion was the only way in which you could really approach the people. And Gandhi, even whatever was his personal views, was a past master in combining this, a religious appeal with, at the same time, being secular. Now, two things should be clear at this point, that two very important things remained unsaid. One was the Baba Saheb Ambedkar, and who basically did not join the Congress because he did not quite agree to the religious appeal of the Congress party and was out of it. And so was the other extreme party. And that is where the story starts. And that party was a strictly, openly religious party talking about the Hindu Rashtra from even at that time. But it had no political traction. Very interestingly, while Congress was being forced to some extent with a kind of official secularism, but most of the congressmen at the highest level, with one or two exceptions, most of them were very solidly Hindu. At the same time, the party which tried to appeal on the basis of Hindu nationalism did not succeed. They were almost nowhere in the picture in terms of mass appeal at that time. This is the, well, as you all know, this is the party which was which gradually much later became clear. So when we start the story of India's development and independence, it was basically a story of a kind of secularism was a bit of a compulsion. On the one hand, there was the Muslim part, homeland business. On the other hand, there was inside the Congress, there was a very great deal of support for Hinduization of politics. And secularism was more or less an official doctrine, which to some extent prevented going off the balance on either side. Now, it was very natural at that time, and it is to Nehru's credit that this secularism was combined with the notion of development and nation building. So what Congress started was a kind of nation building, which was our nationalism, was our economic development, was a kind of proxy for nation building also. And this is what the first phase of Indian nationalism and Indian economic development was, in which it was basically largely led by the states. The performance was, looking back, in some ways indifferent, in some ways good, in some ways bad. India grew at something like 3.5% on an average for over for a long period of time. And its employment growth was about 2%. Labor productivity growth was hardly 2%, 1.5 to 2%, not more than that. And this was for a very long period of time. India went along this path. Employment expanded, so did output at about 3 to 4%, but labor productivity growth was relatively little. Now, this was the period which, as we all know, was the period which is called the state-led, Inspector Raj, etc., the period of growth of India till about 1990s, early 1990s. And we also know, now it is a just history, we also know that is very severe crisis. India's opening up, India's liberalization, economic liberalization, was to a large extent a crisis-driven. 1991, I mean, they made good use, Manmohan Singh made good use of it, but it was started as a crisis which had to be handled. And already, the international air was one free market and so on, which was already there. And India joined the world stream in terms of its economic ideology. Now, this change, a lot has been said about this change and a lot of names are given about this change. But basically, as I look back and I think what happened, I think there are three very basic things by which there is a change which took place without giving it names. First, it was a change from state-led industrialization to a large extent private corporate-led industrialization. At least that was the intent in 1991. And gradually India decided to embark on this path. Many other countries had done this before. Many other countries did not do it. But those countries which did not do it were the so-called socialist countries. And some of them, as we know, didn't do very well. Some of them continues to do reasonably well. But India decided to go away from this path, and quite rightly so. So it was a shift. The first point is it was a shift from state-led to a large extent to corporate-led. The corporations would be the main agent in this industrialization process, India's development, nation building, whatever you call it. The second point about this was it was also very much there in the air of globalization at that time, in the early 1990s, that a real emphasis should relatively shift from the domestic market, what is called the closed economy, to the foreign market. This is the second element. That relative emphasis shifts from the domestic to the foreign market. And therefore, international competitiveness becomes much more important than labor than before. The third element was how was this to be achieved? How was India to achieve this market-friendly, corporate-friendly, internationally more open shift in economic development? This was done basically, as you also know, by three basic instruments or strategies or whatever you want to say. The first one was deregulation. That you have a lot of deregulation of former government, what the government was regulating beforehand and very often arbitrarily was going to be changed. Second was you have basically liberalization of the domestic market and much. So deregulation, liberalization. And the third one, which was already very much there, Margaret Thatcher in England, and it has become quite common in much of Western Europe, but was just coming to much of Asia, was privatization. If you look across the data, whatever data is available, you will see that privatization did not take place very much. But what much more talk about that we need to privatize all those companies which are not making profit. So liberalization, then what do you call it? Deregulation and privatization was the three ways by which the corporate-led growth was supposed to be achieved with a relative emphasis. Sorry? India was achieve its rate of growth. Now, it is also a matter of history, and we know till about, for a period of almost 25 years, India did deliver in one sense at least, and that is rate of growth. The rate of growth was not only much higher, but India grew roughly at about double the global rate of growth at that time. And so India had a growth rate somewhere between 7 and 8%, depending on how you calculate it. But India had an employment growth, and I use official statistics of regular employment growth, or slightly around 1%, actually slightly less than 1%. India was not unique. This is what was true also, for example, a country with a very different political system, that is China, which grew at a faster rate than India, somewhere around 9% to 10%. If their official statistics is to be believed, 9 to 10%, 10%. But again, by their official statistics, the regular employment growth in China was just 1.1%. So something happened during this period of liberalization and globalization, which made growth rate much higher for countries which succeeded, particularly the two big countries, China and India. But the employment growth actually flipped. It was even worse than it was during the period of slow growth. Now, why is that? I have seen people saying various things, but I think the basic reason is fairly simple. Basic reasons are rather very simple. Well, first, as I said, if the relative emphasis shifts to the international rather than to the domestic market, then what happens? Then you have to increase your labor productivity, or what you say technical, in more technical jargon, the unit cost, the wage per the cost per unit of output, the wage cost per unit of labor cost per unit of output has to go down for international competitiveness, at least to the extent price competition matters in international trade, apart from technology. So there was a lot of emphasis on labor productivity growth. And this labor productivity growth actually also meant two other things. That if you want to compete in the international market, it is on the, you have to deliver on time, you have to maintain quality, and all of these are next to impossible if you have a domestic market oriented employment strategy. And this is where the emphasis on international market got combined with a slow growth of employment in terms of number of workers, but high growth in terms of labor productivity. That is, if you take something like 8% growth, and if you assume India's regular employment growth at 1% according to official statistics, then somewhere between 6 to 7% growth came from labor productivity, as opposed to 1% growth in labor productivity in the earlier regime, pre-liberalization regime. And this is what made the thing employment figure drop. Actually, I don't need to, and I don't have time to go into here, but in China's case, it was even more dramatic. And the World Bank published a study around that time, around the late 90s, around 2000, 2001, I can't remember, which was extremely interesting because it showed that China's tremendous growth, export penetration in the international market in the textile sector meant Chinese, productivity growth was brought about by rationalization and mechanization, which reduced the employment to half of what it was before, and then to 1/3 than what it was before over a period of something like 15 years. And productivity grew by something like 3 to 4 times, 300 to 400%. So China became one of the big exporters of textiles over. This is a typical success story of globalized growth, and also a typical failure story of employment growth, regular employment. India suffered from it, China did, and almost any country which tried to do this. Now, this divergence between growth in employment and growth in GDP creates a strong disconnect between, if you like, welfare of the people or general, income of the people and output. I give some examples in the paper, which probably the lecture, which will probably be available to you soon. But I'll just give you one example for those of you, rather than going through the statistics and so on. Suppose a country has, very simple example, suppose a country has 1,000 people and it has, let us say, 10,000 as its GDP. Units don't matter, it can be million, it can be billion, whatever. So per capita is 10. Now suppose a 10% growth. So 10,000 becomes 11,000. Okay. Now this 11,000, not only the 1,000, but you can have a situation where the income of the majority of the people, let us say the rest are slaves, that is only one man who gets all the income, that is almost 10,000, and the remaining one gets nothing, 9,000, and remaining ones get nothing, just one per head. Now their income can even go down, and the other man's income goes up to even more. Or you could have a fall in income, national income, like 100%, and you'd still have the opposite. That is, usual people's income increases, but income of the average income of the people increases, but the income at the top goes down. Like what happened in the beginning happened in places like China, in Vietnam, Cuba. These are the three countries whose data I know a little bit on this particular point. And it's a well-known fact that they were not able to sustain it for long for various reasons, and did not want to sustain it for long for various reasons. But growth, in a way, is a misleading concept. And all these platitudes which you hear with misleading concept, that you have to create wealth first before you can distribute it. Unless, otherwise you'll be distributing poverty. These are platitudes which are not necessarily true. It can be true, but they're not necessarily true. The typical thing that capitalism is good at creating wealth, but capitalism is bad at distributing wealth. It's only a half truth and a misleading half truth. Because very often successful capitalism, had been able to, in the past, be able to combine both, like in the Scandinavian social democracies. Or it did exactly the opposite, like what it is going in America now. So how do you look at growth? The whole problem is, and this is the first major analytical point I want you to understand, that growth is not something which just, growth is something which is inbuilt into the way you carry out your production system. If your production system, in very broad terms, if your production system is highly oriented towards growth of labor productivity, you will find it more and more difficult to maintain a stable income distribution. On the other hand, if you're oriented towards employment growth, you will maintain a lower rate of growth, but your labor productivity growth would be lower, and probably your profits would be lower, but you will be able to maintain a better distribution of income. During the period, just as an example, during the period when India's growth rate was low, 3.5 to 4%, around 3.5%, India was actually maintaining for all those years a Gini coefficient, however you measure it, somewhere between 0.31 to 0.37, 0.36, 0.37, depending on which particular period you as base and so on. Statistics apart. I mean, this has been done in many places, many times, and it always stays somewhere in that range. If you look at the period after that, there has been a dramatic change, not only in India, but in almost all countries. And whether it is a secular tendency of capitalism, like people like, the capital in the 21st century, what's his name? Which is said, whether it's a secular tendency of capitalism or it is something which happened in particular time is another matter. But in the Indian case, which we are discussing, there was definitely a disconnect, and the disconnect definitely came about India's much greater emphasis on international market without producing at home, without giving sufficient to the domestic. Now, this first element of inequality, that is, you have to mechanize to maintain your international competitiveness. You have to mechanize to give on-time delivery, quality control, and so on. At the same time, there were two other very important factors which combined to create this inequality in growth. It was not only employment, slow growth of employment because of the nature of the thing. The second element was, and I think this is often commented on, the second element was, you see, although India very high labor productivity growth compared to its past standard, the unit cost did not fall sufficiently. That would be one way of putting it. To the extent unit cost is considered the only statistical risk, the unit cost did not fall sufficiently for India to become a big export surplus country. Unlike China, unlike now Vietnam, unlike South Korea, unlike Singapore, unlike all the so-called tigers, India actually was and continues to be an import deficit, import surplus country. It has more import than export because throughout this period. But Indian strategy of high growth was maintained because we got a lot of inflow of foreign capital. So we got two things out of globalization. We got this international on the outside market, emphasis on the outside market, which in turn needed labor productivity growth rather than growth in employment. The second thing which we needed was the fact that, we maintained this high growth which was very, one of the reasons why the middle class supported it so much, the high growth with a lot of what I can simply say by inflow of capital or borrowed money. As you know from the Reserve Bank data, a very big chunk of this money, I mean, I'm not only saying that it is just a majority, it is something closer to, I think, 70, fluctuates between 70 and 80% of the quick look at the data which I have had, are less than 1 year. They are short-term investment and short-term investment. They are not long-term investment in foreign investment, greenfield investment in the property. They are not building factories. They are not building factories. They are buying papers. Put it very simply. Now, this meant to some extent that this high growth had one particular thing which had to go with this. That is a fiscal discipline. You see, China today, when it is not having its previous growth rate, growing unemployment, and several other problems, can, just as a matter of comparison, can say much more easily that we will turn to the domestic market. And to some extent, they are turning to the domestic market, whatever they do. In the Indian case, the fiscal discipline is much. Because if you have a lot of borrowed money, unlike China, if your foreign exchange reserve is a reserve which you carefully have to nurture, you have to carefully maintain, then there are certain policies which go with it. And the policies are the typical ones which are not only given, which are earlier much more dependent on what the World Bank and the IMF gave. They still provide the clue to private investment. But today you must remember it is the rating, it is the rating agencies, the Moody and the Standard and Poor. They actually do almost the rating of our democracies. That the world is in such a state that, whether a country is doing well or not depends on the rating of a Moody, depends on the rating of a Standard and Poor. And this requires that we should have a strong fiscal discipline. And the strong fiscal discipline be heavily fallen on the poor of this country. Not only employment has not grown, but as you know, in real terms, education growth, education, health, leave alone insurance, all of these, have suffered a great deal because of the fiscal discipline that has to be maintained. Now, this is the second reason why Indian growth has a disconnect with the people. Low employment growth, very minimal safety net, or not being able to expand the safety net. But the third and most important, and another reason, which actually is much more a product of the 1990s onwards, and I think can be much more directly connected with liberalization. Depending on the private sector, was the fact that you basically have to if you want the private sector to be in charge of your development, then somewhere you have to make sure that they invest. You have to forget about experiences of Japan, you have to forget about experiences of China, you have to forget about experiences of Vietnam, you have to forget about experiences of Singapore, you have to forget about experiences of South Korea, you have to forget about all the successful experiments in one particular sense. Remember, all these countries, and you check your data, in all these countries over a systematic period of time, Japan is the most crucial example of this because it was devastated by the war. But Japan, for a period of 30 years, maintained infrastructure investment, public sector investment at 40% of its budget on average. Very few people have highlighted this, but this is worth knowing. That almost more than 1/3 of Japan's budget, year after year, went into building up the infrastructure which it has. China, Vietnam did it in a different way by mobilizing labor to a certain extent, but they did it. Singapore did it. It's a small country. They did it. South Korea did it partly because of Japan, but partly after their independence on their own. Now, India could depend on the infrastructure to be created by the private sector. It was like waiting for Godot to come. So India decided that this can be done only by incentivizing the private sector. So our, as we call on street, jal jungle jameen, or land, water, forest, you can add hillside, seashore, everything the government was willing to give and is willing to give on very cheap rates to almost at throwaway prices to private sector in the name of creating infrastructure. How much infrastructure they create or not from data which we have in the, special trade zones and so on is not very high, but the idea is that they can do this. The idea is that they would be able to do this. And this was something which was a policy I repeat, and I should probably say it because I don't, that this is a policy which all political parties in the game followed. And they followed it immediately connected also with the electoral funds. There is no two ways of going about it because that is, apart from defense, which is only a central subject, everything else, the easiest way to collect funds for a political party is to be able to take a liberal policy towards this natural resource distribution, whether it's a coal block or whether it's a sea coast or it is the mountains of Orissa, everywhere it is the same story, or it is in Bengal, it was in Singur Nandigram, everywhere I've seen it is the same story, and this is the third major reason which lead not only to environmental degradation, but also a lot of people being displaced. And to give you just one example, even in the most favorable cases, approximately speaking, average difference between organized sector's productivity growth is about 12 times that of agriculture, of marginal farmers' agriculture, small and marginal farmers' agriculture. Suppose these farmers are displaced. 100 of these farmers are displaced. So you have a fall in income if each is producing 2 of 200, right? 100 farmers are discarded. You could actually increase your output 12 times to 2,400. Okay. Yes, 100, 24, 2,400. But you will not be able to do it because you don't have an international market or a domestic market where you can sell 24. So only a few people get employed, say 2 or 3 out of this 100 employed, and the remaining or maximum 10 will get employed, and the maximum ones would be left for the other sector. And this is what is happening in India throughout. The so-called informal sector, the biggest part of the informal sector is nothing but a refuse sector. Refuse sector in the sense people who cannot get employment in the domestic market. I mean, in the organized industry. When they're displaced, they cannot get, apart from, partitioning of land and apart from partitioning of, population growth. The biggest factor is displaced labor who cannot be absorbed in industry. Schumpeter's creative destruction, those of you who have read about it, or taught in the class to move along the, what is called production possibility frontier, should know that this is junk. So far as India's case is concerned, this is simply not it. Like that. Anyway, these are the reasons why we have growth. Now we don't even have that. And we have a disconnect between whatever happens to the country and population. Even if you have growth, people did not do too well. And when you don't have growth, with demonetization, no growth, and now agricultural policy and labor policy, things are much worse. Now I could, even if I had a lot of time, I could go on and give my agenda of what should be done. It's pointless. And that is where I want to end it. You see, it is pointless because, as a famous physicist, Feynman said when talking about, giving an example in economics, you see a depression is there. He was talking about the United States. He was a physicist, one of the second half of the 20th century. And he gave this example in a lecture that there is a depression. Okay. Now, whether the government to take policies to stop the depression, there is a lot of unemployment. But whether the government to take the policy to stop unemployment depends on something else. Depends on what really the government believes its interest is. And this is what the government should do is not what an economist thinks they should do. What the government should do is what the government believes it should do to stay in power and to get the right kind of support. And this government, at least, and I think also to some extent the previous government, believed that we needed some growth, but that's it. And now they don't even believe they need growth. And unemployment is simply not on the agenda. Unemployment is simply not on the agenda because, and this is where the connection with the beginning of the lecture is, unemployment is not on the agenda because with the inequality, and I suggest to you that this is a very good empirical research topic, that with increasing inequality, if you take a long time series, look at what happens to your stock market. The stock market and the real economic growth, production, not only do not bear a close relationship, but you can have a stock market boom, at least for quite some time, you can have a stock market boom. Because if you distribute income at the top, they are not going to buy their 10th car, or they're not going to buy their second yacht, or their 20th house. What are they going to do? They will become, what does Bill Gates do? What does any one of these multi-millionaire was Ambani do? What do Adani do? Outside what they are investing for their own expansion, they would put it in the stock market, their own stock, somebody else's stock in the stock market. So the growth of the stock market is very closely, the health of the stock market, so to say, is very closely related with income inequality growing at the top. It is very interesting during this period of depression, world over, the stock market has fluctuated. Probably the dispersion is higher, probably the standard deviations are higher, but stock market itself has not gone down anywhere. And there must be a logic to it. The logic to it is that this is also the period when inequality has grown faster. So in India, it is the growth of inequality. The growth of inequality has helped the Ambanis and the Adanis and all the others. It has just come out recently that the Tatas was one of the biggest subscribers after the reorganization of the Tatas to the, this, what do you call the election bonds. And they all give money to that. And that is what the government realizes its interest lies. That plus reviving the idea of a Hindutva, and the Hindu Rashtra. They think they can make the game, they can win the game. Thank you. Thank you. I've just been 1 hour.
Thank you very much, Professor Bhaduri. Now the floor is open. I think Professor Bhaduri is willing to take questions. You could use the raise hand facility, or you could put your question in the chat box, and I will read it out for Professor Bhaduri. I can already see that Sushil has already raised his hands. So Sushil, would you like to ask the first question?
I can't hear it. Hello?
Yes.
Yeah, I'll come in a little later. I'll come in a little later.
Yeah.
You start with somebody else. Yeah.
Okay, he would like to ask later.
Oh, okay.
Anyone else? I think Sushil, you may ask the question.
Sunil, I was requesting a question opportunity. Sudipto here.
Okay, then please go on.
Uh, First of all, Amita, thanks as usual. Extremely clear, concise description of your understanding of what's been happening in the past few decades. Thank you very much for that. I do have a comment and actually one or two clarificatory questions, mainly to get my head around what you said, and maybe I've missed some things I wanted to ask you. One is, as you described, I mean, the emphasis of the, if you will, the post 1991 model of growth, if I call it that, was to emphasize the rise in labor productivity, and certainly it was. But that was, in a sense, also one of the central points of the old, if you will, the Fellman-Mahlanowitz model, which served as a framework for the earlier period of growth. So perhaps there was not that much of a change in terms of emphasizing labor productivity. Maybe it was more successful in the later period. That's just a comment. My question is the following, and this is about, again, this later period. As you said, there was a period of strong growth acceleration, and labor productivity was also rising. But this was not, as you said, it was not export-led growth of the East Asian variety, nor was it, according to my understanding of what you said, led by large fiscal expansion, though some would believe it was a period of fiscal expansion. But you said it required fiscal discipline because of rating agencies and so on. So are you then suggesting that it was basically really investment-led growth? Investment being motivated by all this cheap natural resource availability to corporate houses and so on. So that was part of the question. And a related part is that while there was this extreme rise in inequality, and I think that's probably absolutely correct, we do see at this time, along with rising growth and rising level, we do see a very rapid reduction in the incidence of poverty. And I'm again going just by official statistics as you have. So I think that requires something to complete the story. And that's it.
Can I answer extremely interesting points? Can I just react?
Yes, please.
I think you are right. Probably India's Mahlanowitz type of growth and so on, the emphasis on the sector and so on. In a way, it was meant to increase labor productivity, but it was also something more. It was supposed to create the very base, of base for raising productivity. But, that is anyway, I think the comment is right. The interesting point is what kept up demand during this period. India's demand during this period of high growth, to a large extent, as you know, was also a period where there was a steady increase in share of investment in national income. So to some extent, I think it fits the statistics, though I don't know whether it fits the causation. It fits the statistics that it was, I would not say investment-led, but investment was a very important. The second part is statistically what we have seen is that while there was relatively little expansion of, comparatively speaking, there was relatively little expansion in terms of the, what I would have liked to have seen in terms of safety net expansion, put it short. What India really did during this period is something else. If you remember, there are some studies, and many of them were published, that one of the things which unambiguously comes out as the most important thing is public consumption. Public consumption increased very sharply, and that was certainly one of the things which kept contributed. After all, this is a very large portion of the growth. Both private consumption and public consumption, it was much more. It was investment increased, export did not increase. Export did not increase in the sense export surplus did not increase. So it was a negative foreign trade multiplier. But
yes,
that was much more neutralized by growth of public consumption and by investment. That is what at the macroeconomic level I would roughly say feeds the data. Labor productivity is a more complicated point to which I'll have to come to later. On the question of poverty, as you know, and this is not something which I particularly, there is the absolute poverty and then there is a relative poverty. Now, the relative poverty or inequality increased very vastly. If you go by official data, I think you have two types of official data. One kind of official data, for example, of Judge and that commission, then many other data even recently on. Most of this shows that somewhere between 70 to 80, the typical figure given is about 76%, but let's say somewhere well above 2/3 of the population lives on a very low level of income by any standard, which is not sufficient to give reasonable nutrition, leave alone the other elements, housing and health and so on, leave that out. But even in terms of minimum nutrition, these incomes don't seem to be sufficient. Now, extreme poverty is increasingly has become anybody's game. I think the way the poverty line is defined, maybe this is my bias, but the way the poverty line is defined, you can tell me anything by just combining the data. Indian poverty has gone down. Certainly it has gone down compared to the 1960s, 70s, it is going down. But it is also almost certainly true. Both my common sense, my casual observation, and the alternative statistics, which also is equally biased as the government statistics, but doesn't seem to me to suggest that when I look at even a place like Delhi, and if I look at the number of small children and so on who are on the streets and everything, it doesn't seem to me that there has been a dramatic reduction in poverty. Has gone down, but it is at a sufficiently sluggish rate that has gone down. That's all I can say. It certainly has not gone down in a way in which I have seen anything like which I have seen in China, or you have seen in China, in Vietnam, not only in this, or in Korea, or in South Korea, or in South Korea, or in anywhere, Singapore, Hong Kong. I don't think anywhere it is not only the inequality and relative poverty, but the extreme poverty also. India does have a very high code of poverty, and that is reducing very slowly. That is, I am almost sure of that.
Thank you.
Amit,
good to see you.
yes,
I
Amit,
told you, Sudip, good to see you.
Yeah.
Yes.
okay. There is a question from one of the students. He would like to know how income inequality contributes to the recent slowdown in demand.
Well,
Now, after this, I would like to come in also. Yeah?
shall I?
Yes, please answer.
If you take the simplest case meaning what you are taught in textbook macroeconomics. If you take the simplest case, and this is the case which was elaborated by Stephen Margolin and myself in a separate model. But basically, if you take the simplest case, what does inequality do? Inequality does two things. It increases your savings. I'm talking about textbook. Inequality increases your savings because more money goes to the richer people who save more, and therefore your savings increases, and this decreases your multiplier. Okay, and it is also assumed in all these simple things that investment does not increase very much as inequality increases. So you have an increase in savings, you don't corresponding increase in investment, so you have a downward pressure in standard Keynesian notion of demand. If you ask me really what happens in India, I'm much more diffident because I don't think we have a proper, I mean, I certainly don't, and I haven't seen anybody very clearly, a proper macroeconomic understanding. We can say many things, but I think one of the things which happens is the little bit of data which I have seen, and I've been trying to sort it out in my mind, that you see in the Indian case, much of what happens to the growth is basically in the organized sector growth. What we have data on is organized sector growth, and the statistics on the unorganized sector is very often a derived statistics with some 5-year surveys and so on and so forth. Actually, you don't have data on the unorganized sector. This is the big black box or black hole of the Indian economy. And if you assume that the unorganized sector behaves like the organized sector in terms of demand and so on, then I think it is very clear what inequality does. If you think it is not the case, it is also quite possible that increase in inequality actually creates in a perverse way, but shifts demand to some extent from like what it has been doing during the pandemic. To some extent, I have some sort of evidence of this from what I hear from people who do agitational work and so on in the unorganized sector. That actually in the unorganized sector, to some extent, now people are forced to spend on good organized sector, provided it is available. Whether it is available or not is another matter. So there is a switch of demand from the organized to the unorganized sector. This switch is not there in standard macroeconomic textbook. I don't think anybody has understood it properly. Thank you. But the standard answer is very clear: an increase in inequality means redistribution of income in favor of the rich, and an increase in savings, and given investment does not increase very much. The only thing I added in my lecture is to say that investment increases, but investment increases in buying stock in stock markets, but not in terms of real investment. Thank you.
Very much. That question was on behalf of Umesh Bhagat. Now I will ask Sushil to ask his question.
That is Sushil Khanna.
Yes, Amit, how are you?
Yes, I'm okay.
So
Is
just
that the question?
Yeah, no, that's not the question.
Okay.
Thank you for a very, very, very lucid and sort of overarching view of many decades together. But I would like to draw your attention to a little closer period. You know, when growth for a while accelerates and then falls down again. When it accelerates from 6-7% to 9-10%, let's say 2004, 5, 7, and like that till 11, 12, 13, like that, and then falls again. That small period of time, and those were right that the rate of employment in the economy was pretty low. And you also talked about the unorganized sector. A very interesting thing is happening at this point of time, and I think this is something needs to be explored more, that the so-called investment in what we call the household sector, went up very sharply. Household sector was always a sector which provides savings but doesn't invest, why traditionally It transfers money to private sector through banking and stuff like that. But during this period, it becomes very large, say 2007, 8, especially 8 onwards. And is it linked to large-scale migration out of villages, which we saw into urban centers? And some surveys show, there is a JNU survey on migrant workers who are going back, and almost 45% of them were self-employed. It means they were running small tea shops or which will all get, even if you do those 5-year surveys, will get captured in some sort of a investment in anything. So the household sector investment, which is unusual and again falls down again after Modi demonetization and so on and so forth. But that small goes to show that there was something else happening in the economy. That since the formal sector was not able to provide employment to people, young people were somehow trying to make do with some living through some small investments and stuff like that. You know, running a hawker's place, running small repair shops, running small eateries for migrant workers and stuff like that, which will all add up to some kind of employment in the unorganized sector. What is your impression about this? Unless we can't explain the spurt in growth without looking at the role played by the household sector investments.
Can I? To some extent, well, I think I have half an answer, not a full answer. But let me just one thing. You don't mean residential housing. You mean household sectors, investment expenditure on non-residential housing.
Yeah, both. Actually, the figures capture both, but you can get the breakup for machinery and other things also. You can get that breakup.
But you see, if you look at the more detailed national income accounting breakup, during the early periods, during the period of high growth, so-called high growth, 7-8% and so on, there was also, as usually happens, there was also a considerable amount of growth in residential housing. In the small sector, there was residential housing. Now, I think this probably, from whatever little we know, this probably is not on. Now, what you say is very interesting. I have also heard from people that, well, you see, when people are desperate, they have gone back to the village and so on, whatever it is. They try to make living. After all, they're a big part of the whole informal economy. I mean, if you do not find a job in the formal sector and so on and so forth, you go to the informal sector. Now, you see, what you very often find, and this is, what is that CSI or whatever it is, the data which is given out by the Indian economy. There has been a lot of increase in the business in terms of people who have gone out to do business. But you must make a distinction between starting a business and making an income. That is, you see, to put it in proper statistical term in terms of employment, I did not use more technical sort of boring stuff here. In terms of time-wise employment, in terms of hours of work for which people work, the little bit of survey which you have, and I'm interested to see this. Actually, somebody from Stanford also did it from me and sent it to me. That in terms of hours of work, how, you have definitely a lot of people have gone back to jobs. If you ask your principal status, I will say, I have become a hawker. I do spend 8 hours to 9 hours on that. If you ask in terms of employment, in terms of income-wise employment, there has been a sharp reduction, even of the hawkers. And this, I think, will fit Indian data quite well. I mean, if you require an overall picture of the, informal sector right now, what is happening since the demonetization, I think income-wise, time-wise, there has been an increase in employment. People work longer hours. I don't mean in terms of marks and so on. I mean simply in terms of job, and now more going back in terms of the pandemic and so on. In terms of hours of work, but in terms of earning per hour, it has drastically gone down. So that, and it would be, if you know somebody who is doing a survey, I have already told somebody, but these people are all, people who do this kind of work are all settled abroad. But if you can find somebody who do this work in India, and because I don't want to supervise people in America sitting here, but if you can get somebody to do it, I'm sure this will be a very, very fantastically good empirical work. That, time-wise employment versus income-wise employment during the pandemic period, after this migrant workers went back to their villages and so on.
Yeah, but if you take a little longer period from 2007-8 to 16, before demonetization, look at that period.
That period, I'm not very sure, because I think that period also was, if you take out residential housing, investment in residential housing by the household sector, if you take that gap is not very large. There was a lot of investment, but there was a lot of investment also in residential housing in that period. All this is, we have to look at the statistics more carefully. Thank you.
Okay, thank you very much. I will now request Professor Pulapre Balakrishnan to ask his question.
Yes, sir.
Thank you, Professor Bhaduri. I really enjoyed listening to you. Mine is just a comment, not so much on your talk, but some of the discussion that came up later and your responses. In particular, the comment by Sushil Khanna about the role of the household sector, and he may well be right. That's absolutely correct. But he also spoke about high growth. The high growth phase, roughly 2003 to 2008, was also a period of very high public investment, actually, interestingly enough. And this public investment went into infrastructure, which you highlighted was part of the Japanese experience. There was also private sector investment, but in infrastructure, but it may well have been crowded in also. But that apart, public investment was very high. And something which is not very widely known and came as a bit of a surprise to me, I became aware of it because of a paper by Shetty, S.L. Shetty, and Devkar, who speak about agriculture 2003 to 2008 as having grown at one of the fastest rates ever in India. And they actually try and... yes, that's a huge surprise to me. You'll find it in the EPW, Professor Bhaduri. If you just type it in, Shetty and Devkar, it's about 5 or 6 years old. And they actually link it to specific policies, which is also interesting. But actually, just the raw statistics tell you that agriculture grew very fast. But I was not aware of it, and they link it to some specific policies. Anyway, I just want to add that, or bring this in, that the high growth phase is also linked with very high public investment in infrastructure and also very high agricultural growth. This does not mean that the private sector, both corporate and household, did not have a role, but I just want to say there were what we might think of as exogenous factors contributing to the surge: public investment and agricultural growth. I've written about it somewhere, but I just thought I'd make that point. Thank you.
Very interesting. The point is very interesting, you said. I want to ask you just one thing, 1 minute. Tell me, these were the, I don't know, these were the period, what was the agricultural, of the period growth of high agricultural growth? Was I don't want the number.
Okay.
Good periods, were these good periods in terms of monsoon and so on?
I can't answer that, Professor Bhaduri. It's a pretty good, I can't answer that. But whatever it is, whether it is monsoon or the economic policies or agricultural policies, which Shetty and Devkar make a point about, it's just the fact that there was an exogenous thrust to high growth. That's all that I want to say, which came from agriculture. That will remain, right? Whether that is due to the monsoon.
Well, you say, sorry, since we are on, let me just make one slightly analytical point. if
Right.
your industry and investment in industry is going sufficiently, and
Yes.
if agriculture grows at the same time, it is not only a matter of statistics. That means agriculture is being able to sell its product and get the income without a fall in the agriculture prices. Okay. Now, if it is a period where industry is not growing fast, like now, like just this year, and that's why I'm saying it, agriculture did reasonably well. It was a very good monsoon year, so on and so forth. But it would not have added very much to in demand because it would have been largely neutralized by falling price. And now, of course, with the government policy, it is even worse. But even leaving that out, there is a point of whether agriculture grows with industry or agriculture does not grow with industry in terms of realization agricultural output into income. Thank you.
Yeah, Professor Bhaduri, I just want to complete this very quickly without holding it up. You're absolutely right. Your analytical point is taken. I just want to say the exogenous factor there, then beyond agriculture would be public investment. That's all I wish to say, which is not affected by falling agricultural prices.
Yeah.
But thank you.
I also remember that 2003, 4, 5 are known
So
as years of high public investment. Yeah.
Can I just add a line on this?
Sure, I'll be happy to hear what you say. Yeah.
This public investment rise is actually accompanied by a sharp increase in what we call public sector commercial enterprises investment. Okay,
you may well be right. Yes.
And there is a price deregulation to facilitate private sector entry into electricity, into petroleum and stuff like that, which leads to across the board price deregulation of some of the items which were earlier controlled, leading to a sharp increase in profitability of these enterprises. Their profitability jumped. The surplus is 2.5 lakh crores a year roughly. And I was in the boards of those companies at that point of time, some of those companies, and the finance minister would meet the chief executive of 20 of these companies every month to press them to increase investment or give it out as dividends. So government got 1 lakh crores as dividends, which again went into what you're calling public infrastructure investment. But the commercial enterprise investment also goes up very sharply from 2003 and linked with 2003 price reforms in electricity and petroleum. This is my argument.
I see. Okay. Thank you. I wasn't aware of that. Thanks.
Okay, thank you. Who would like to ask the next question? Somebody has put a question in the, somebody called Dhruv Shetty has asked a question in the chat box. He wants to know, he or she wants to know your opinion on the contribution of the likely contribution of the recent Atmanirbhar package with respect to employment creation.
What package?
Yes.
Well, if the person who is putting me the question assumes that I have more knowledge than I have, I don't think I'll be able to put any number on what is the, you see the Apna Ghar create, unlike the NREGA and so on. I think it was much more a self-help kind of investment. That's what I understood, at least from Gorakhpur, because that is where, in UP, Gorakhpur, they had quite a few of it, and somebody whom I know was working there and told me. So I'm only speaking from a very localized experience. But I don't think the Apna Ghar experience was unlike the public toilets. It was not something which could generate very much of.
No, it was, he or she is asking about the Atmanirbhar package, not Apna Ghar.
Atmanirbhar package.
Yeah.
Atmanirbhar package is the one about which Sushil Khanna had already asked. I think asked me in the sense that we already.
This is the new stimulus package that this government announced after COVID.
Yeah, I know. The Atmanirbhar package is basically a package where you can, as you know, you can borrow money from bank and you can start your own business, right? Now, whatever has started there, I'm just repeating myself, whatever has started there, to a large extent has started without a stimulus, corresponding stimulus in the demand. That is the Achilles heel. That is, you see, you can, say, for example, take the simple case. You decide to start a restaurant, a small restaurant where you can, you can make some living out of this. You have no job now. Now, if you decide to start a restaurant, then basically you will keep it open. You will be working there for, whatever it is, you and your people, 10 hours. You will keep it open. But how much money you will make depend on how many people will come there. A big gap, I'm repeating, there will be a big gap between, if you think of employment in terms of people who now declare themselves in terms of their principal category in official jargon as being employed, they would be employed because they're working for so many hours in a restaurant, but they would not really be employed because they take home very little money. So income-wise, employment has increased much less and will increase much less in the way the government has imagined, conceived the Atmanirbhar package. Actually, almost all the packages of the government suffer from this, that you will be, if you take advantage of this, you will be employed in terms of loan and all that problem apart. You will be employed in terms of time, but you will not be employed in terms of money. I think that would be the most central point around which analysis should be built.
Okay, thank you. Any further questions from the floor? Okay, I think I think we have now come to an end. Let me see.
If you are going to finish, then I wanted to finish on time to have a question answer session properly. I just want to say one thing for all the economists or citizens here, that there is one thing which you should know, or we should always remember about economics. An economic description of what happened, apart from, it being the bias of the person concerned. Does not tell you what is to be done. In philosophy, they say that is and ought, you cannot derive an ought proposition, what should be done, from an is proposition. This is one of the first things you learn in, ethics, philosophy, and so on. And I think this is very important for an economist to remember, that because we say that there is a lot of unemployment, we believe that is in our ethics that the government should do something. The government might have it and does have a very different ethics. And that is what actually is what is happening, not only here, but everywhere. Thank you. I just wanted to.
Okay, thank you. Yeah, thank you very much. Now, the copy of the lecture will be uploaded on our website, so you'll be able to download, and also the recording of the lecture. So those who have not been able to participate could, listen to the lecture or read the lecture downloaded from our website. And this will be done tomorrow. And so, Professor Bhaduri, thank you so much for this excellent lecture. And we look forward to seeing you here in CDS to give those lectures on macroeconomics. Now, you see that, this virtual session went quite well, as you have seen. There was very little interruption from the technology point of view. So you could still do those macroeconomics lectures online.
Thank you very much. Thank you.
Okay, thank you.
All of you for coming. Thank you.
Yeah, and I thank everyone for coming for this Foundation Day lecture, especially the alumni from CDS, the previous directors, there are 4 of them I could see, and I thank everyone. And the next 50th Foundation Year celebration lecture is actually on the 2nd of November when we have a new book released. Thank you.
Thank you.